Welcome back to another episode of Stock Talk. If you guys are new to my channel, welcome. My name is Julie. In today's video, I want to talk to you guys about when you should be buying the dip. Now, I know there is a lot of investors and traders that entered the market in 2020, and a lot of them were making a lot of money because the general stock market was going up and it was easy to make money. But if you guys started trading sometime in 2021 or even this year, you might already be down on your accounts and you have a harder time finding when you should be entering and exiting your trades. In general speaking, I think there's a huge misconception on how trading actually works, especially if you are a newbie. That's why I wanted to go ahead and make this video so that we can talk about resistance and support areas and determine when is a good time for you guys to enter your stocks. You see a stock plummeting and you think it's a good deal and you just jump into the stock and then just find yourself seeing that your account is going even lower because you didn't wait for key areas to actually enter the stock. Instead, you just jumped right in when you saw the first dip. That's why it's important that you guys can determine key areas, which are support areas and resistant areas. And I want to help you guys out with this video and show you what you should be looking for. So if you guys are new to the stock market, then this video is for you guys. So in today's video, we're going to take a closer look at the support area just simply because the overall market has been going down. And I want you guys to see where would be a good entry for any stock. Now, I'm going to go over the SPY chart, but whatever I'm showing you, you can apply to any of the other stocks that you are considering trading. So what is the support level? Well, when the stock sells off, that's because there's a large number of investors or traders that are selling their stocks and there isn't enough demand to catch the stock. So we're going to see the stock price fall. Now, when we get support, that's because we have a large number of investors and traders that are willing to pay roughly the same amount of money for the stock, and we'll see that the stock will stop declining. And these are usually areas where we'll find support. However, sometimes you see it looks like support and then the stock continues falling down. So that's why there are some areas that are actually a little bit more important than other areas. And that's what you need to pay attention to. Now you can take a look at the moving averages, and typically I use my 300-day, 200-day, 150-day moving average, or you can just draw your horizontal lines where you see prior support or resistance. Besides looking at the moving averages or your support and resistance lines, you also want to take a look at the overbought and oversold areas because those go hand in hand with the support and resistance levels. But just because the stock is selling off doesn't mean it's automatically in the oversold territory. So that's why you want to take a look at those areas, and you do that with the RSI. And typically an RSI that's below 30 is considered an oversold area. An oversold happens when there's an aggressive sell-off. Additionally, we want to take a look at trend lines to get a general idea in what direction the stock is moving. So a downward trend means that the bears are in control, and in an upward trend, the bulls are in control. So again, when do we buy the dip? So first I want to say, get it out of your head that you think you are going to buy the absolute bottom or that you're going to sell on the absolute top, because that is not going to happen. And if you make peace with that, you're going to be a better trader for that in the long run. So now that we have spoken about the different key factors that we should take in consideration when entering a stock, let's translate that to an actual chart and see how we can determine where we should be entering the stock. So we are looking at the SPY chart, and I'm on the 1-year chart, meaning every candlestick represents a day. And you can see that I already draw in my lines. Now, how did I get my lines? So if we were back in March of 2021, obviously we would not know anything happening in this area because we cannot predict the future. If we could, that would be fantastic, but we can't. So how do we draw our lines? Well, I would start with an area that shows me where the stock either going against resistance or finding support. So for example, towards the end of March, we can see right around 384, it looked like it found support over here. And I say that because it had previously found support earlier in March. So I would kind of highlight this as an area. And essentially, I would just draw a horizontal line. Then the next line that I would draw is where I saw that it tried to make a new high, but it found resistance. And then I would start drawing the horizontal line. So now I have a few points where I would want to pay attention to. But of course, this doesn't tell me when I should be entering my stock. So obviously I wouldn't want to enter the stock right around $3.99 if I see that the stock got rejected around this point. Instead, I would wait and see to enter the stock if I saw that it found support, and it looks like it found support right around 386. Now remember, I also mentioned the moving averages. So as you can see on the chart, I don't have any moving averages in here right now. So let me go ahead and add a moving average. So I just added my 50-day moving average, and you can see that the 50-day moving average and the support line are crossing over. So, and we can see that the moving average is actually on an uptrend, and the stock came down to the 50-day moving average. So now I have two confirmations where it shows me that the stock found support on my support line and it found support on the 50-day moving average. So to me, that is a great entry. So what I would do is on the next green candle, which is right around 390, this one right here, and let me actually just zoom this in for you guys. So again, the stock found support on my support line, and also it found support on the 50-day moving average. So I would now enter on this next green candle, which is right around 390. So let me zoom back out. Now, how long do you stay in this trade? Well, knowing that the stock got rejected around 398, 399, I would definitely pay close attention to this area. There's a few options that you can do. You can either set a sell order for, let's say, 397 or 398, or you could wait and see if the stock climbs higher, and then you can set a stop loss, and you could set the stop loss let's say right around 396, 395, and if the stock falls, then you would exit the trade. However, being that the 50-day moving average is on an uptrend, and as long as the candlesticks are above the 50-day moving average and above your support lines, then you could stay in this trend for even longer. So now that the stock is on an upward trend, you can also now add your trend lines. So you would take the lowest point, which would be right around here, which is 383, and you would draw your trend line as such. And as long as it stays above the trend line, you can stay in the trade. And if you were to trade off the trend line, then you would actually exit the stock when it was trading around 412, 413, because that's your first red candle under the trend line, and that's when you would want to get out of the stock. Now, of course, you could argue, well, the stock went higher to 421. Now, again, earlier I said you're not going to ever find the bottom, and you're never going to sell at the very, very top. But you did a really nice trade if you entered right around 390 and then you got out at 414. So that's a really nice trade. Now what you do is you just wait to find support again, and then you can enter the stock again, and you do it all over. And we can see that the stock did find support right on the 50-day moving average again. And so this is where you could enter into the stock. And now that we have two areas where the stock found support in the 50-day moving average, we could actually draw a new trend line starting right over here, and then connect the dots, and then just keep going up diagonally. And again, remember, we don't see this happening. Of course, hindsight is 2020. Now we see what happened. But we wouldn't have seen this if we were trading right over here. So anyways, what you do is you draw your new trend line, and then you can stay in this trade as long as the stock stays above the trend line. And if you continue this, then we can see this is where you would want to exit when it drops right below your trend line. And you get out, this is somewhere about 446. So now you would have traded from 390 all the way to about 446. So this is even a better trade, and you would have been in the trade from April to about mid-September. And of course, you could argue you could have stayed in the trade all the way to 479. But the point is, you don't really know where the stock is going, so you want to stack all the odds in your favors. For example, we can see over here where it fell below the 50-day moving average, it dropped actually all the way down to the 300-day moving average. So that is why you want to go ahead and take your profits off the table when you see that the stock is going against you. Now let's fast forward to today. So we can see that we're currently trading at 434. Well, that was as of Friday, February 18th. And based on my previous support lines that I've drawn, my current support would be right around 424. However, there are a few things I want to point out. We are currently trading under the 50-day moving average. So you never want to enter into the stock when you're trading under the moving average, because you don't know if it's going to fall any further. So there's a few things that you're going to do. You can add your next moving average, which in our case would be the 100-day moving average. So let me go ahead and add that real quick. So I added my 100-day moving average, and you can see we're also trading below the 100-day moving average. Now let me go ahead and add the 200- and 300-day moving averages. So now I have all my moving averages in here. So Based on my 50-day moving average, my 100 and 200-day moving average, and the fact that we are not close to support, I would not enter the stock. But when would I enter the stock? Well, I would enter the stock if the stock finds support on my previous drawn support line, which again is around 423. Additionally, if it finds support on my 300-day moving average, which is right in line with my support line, again around the 423, 425 area. And we can see this has happened previously right over here, so that gives me good confidence. However, and let me zoom this back in again for you guys. Previously, we drew our uptrend line, and now we're going to draw our downtrend line, because just like you want to make sure that you find an area where you get out of your stock, you want to find an area where you get into the stock. And this is a good example where you can see when you should be getting into the stock. This is a downtrend line, as you can see, and you would want to enter the stock on the first green candle that opens and closes above the trend line. So that would be right around 441. Here we have the uptrend line, and then this is where you would want to sell on your first red candle. Again, you just stay in the trade as long as you see the stock trading above the trend line. And you would have traded from 440 to roughly 452. So that is a nice trade as well. So that is the same that we would want to do in this area where we are today. And actually, let me move to the 4-hour chart so we can see it a little bit better. And I also added some empty spaces here so that I can draw my lines a lot better. So we can see again, we are in the downtrend. So I would go from the highest point over here and then connect my dots and just drag this down as here. Now, if I were to extend my support line right over here, we can see that my same area would be 423, which is the support area. So, but again, we wouldn't want to enter the trade until we see that it finds reversal right over here, which means the next green candle will open right in this area. Now, it could happen sooner. We don't know that, but that is what we want to watch out for, that we don't enter the trade until we have the first green candle open and close above the downward trend line. So that's how we do that. Now, of course, if we don't see this happening, then we could see the stock trade even lower. And if we zoom back out to my 1-year chart, we can see that my next support line would be right around 399, and that is where we were pretty much a year ago. So we could possibly see the stock fall down to 399. That is, if it doesn't find support and reverse right on this support line right over here. Then possibly if it falls any lower, then this current support line could actually become our new resistance line. But we don't know until we see what the next candlestick does. And if we see that the stock does not find support on the support line and the 300-day moving average on our 1-year chart, and we see that it falls even lower, then what I would do actually is go out on my 3-year chart. And taking a look at my 3-year chart, you see the lines transfer, and we can see that hypothetically the yellow line would continue up and actually would meet my support line that we drew right around $400. So then hypothetically the stock would be sitting on the 200-day moving average on our 3-year chart. And if we then see that the stock is trading above the downtrend line, then that would be a sign of reversal. So again, you can always take a wider stance and take a look at the longer time frame, especially in current markets where anything can move the markets very extremely, like we've been seeing lately. And if you've been watching any of my other videos, you know that I've been watching the 3-year chart more closely lately, because again, a lot of stocks have moved up quite a bit, quite too fast. And I think it's best to take a look at the wider horizon. And this is the principle how you add support and resistance line, and how you take a look at what's happening with the overall chart. And I know all these lines are very confusing at first, but the more practice you get, the easier it gets. And eventually you can see this without the lines as well. All right, I hope you guys got something out of this video. If you did, please be sure to hit that like button and consider subscribing to my channel. And again, if you have any questions, leave me the comments below and I'll do my best to answer all your questions. And I'll see you guys in my next video. Until then, bye-bye.